This is a hearing. There's no pending legislation, so it's a little bit different than what we usually do, where we're actually commenting and taking testimony on pending litigation or pending legislation. But what we're doing here is there has been a problem that has arisen in the Rome-Floyd County area of the state, that even though they are the ones that are suffering under it now, it has statewide implications and could happen in any community of this state. And certainly we need to be aware of what has happened, why it has happened, what the law does that maybe leaves no alternative that whatever happened, happened. And we need to look at whether we need to take some kind of legislative action when the session resumes back in January. And it's not one of those things that you can do on a short term, like in a 40-day session, when you're dealing with a million other issues as well. So I want us to sort of get a head start on that. I was made aware of this back in July sometime, and have had several conversations with Representative Katie Dempsey on behalf of the Floyd House delegation. And she has requested that rather than wait till the legislative session to address this, that we go ahead and get the facts and start deciding what, if anything, that we want to do as a legislative body about that. And so I want to thank her for bringing that to our attention, and thank the other members of the Floyd House delegation for doing that. And at her request, we had a hearing set for this afternoon on some TAVT and some tax issues, and Ron Stevens, who was going to chair that hearing, could not be here, and so we decided that rather wait till later, we would do it sooner. And so want to give the there have been numerous news articles. I don't know how many members of the committee have read those, but I think it's very clear what has happened. I'm going to ask the Commissioner of the Department of Revenue to give us an overview of what happened, and I think she's got some staff members that can address some of the policy and legal issues that resulted in this happening. And then after all of them have spoken, I'm going to allow the committee to question any one of those that they would like to get some further information, and then we'll probably comment and discuss, what, if anything, that we want to do next. And so at this time, Commissioner Riley, welcome, and give us an overview, the big picture, and then we will break it down into its little component parts.
Thank you. Thank you, Mr. Chairman. Thank you, members of the committee, for providing us the opportunity to be with you here today. I'd like to introduce the other members of the Department of Revenue team that are here with me. First, to my right, Frank O'Connell, General Counsel for the Department of Revenue. On my left, Chester Cook, Program Manager, Department of Audits, and next to him, Anita DeGumbia, Assistant Director of the Audit Department. We also have with us today our counsel from the Attorney General's Office, Mr. Warren Calvert. He's seated behind us here, and if there is a need for him to respond to any questions, he came with us today in order to be able to do so. I'd like now, if with the permission of the chair, to give a brief overview of the situation that has brought us here together today. In late June, audit management of the Department of Revenue came to me and presented to me the results of an audit project that they had been working on, and a proposed resolution. This audit and the proposed resolution involved a Floyd County taxpayer who had submitted a request for refund of overpayment of sales taxes in accordance with state statutes. When the department receives any significant refund claim that involves complex issues, an audit is generally indicated, during which the department will examine not just the refund issues, but any issue which might bear on the taxpayer's entire tax liability for that period. In such an audit, as will be discussed by the members that are with me today, and they are part of our department's compliance division, a number of factors can lead to an extended audit period, and they'll provide some more information about that. After a thorough review of the work product that they presented to me, I had made the decision to execute the terms of the proposed resolution of this case. I also made the decision to distribute the entire amount of the state's portion of the taxes and interest that were due to the taxpayer in a single payment so as not to incur any additional interest costs to the state. The taxpayer had offered that we, the state, and the local governments, their portion of the taxes and interest, could be paid out over a period of months, up to 12. However, part of that conversation would include interest continuing to accrue on any unpaid balance until the total refund had been resolved. At this time, that was the facts of the matter. I made that decision to have the state's portion be paid immediately. From my prior service as a county commissioner in local government, I quickly understood exactly what the fiscal impact would be on this audit resolution to the local governments of Floyd County. And I knew from experience the concerns that it would cause. I reached out immediately to the chairperson of the Floyd County House delegation, Representative Katie Dempsey, to advise her of the situation. She and I spoke extensively on the ramifications of the refund payment and how the local governments, the Department of Revenue, and the General Assembly might work together going forward for future benefit to the taxpayers of Georgia. My attendance the following day at a Georgia Municipal Association annual meeting in Savannah provided me the opportunity to meet with Commissioner Evie McNeese in person while we were both attending this event. And I shared with her at that time this particular situation and the pending refund liability that would be incurred by the local governments. I explained to her the choices that the local governments would have, the ability to absorb the refund in a subsequent distribution of sales tax collections in a subsequent period, or the opportunity to consider spreading it out over a period of months and unfortunately continuing to incur an interest on any unpaid balances. The following Monday, after the GMA conference, I made a call to Senator Chuck Hufstetler to share the same information with him. In the following days, members of the Department of Revenue reached out to management of the local governments to seek a consensus on what timing that was preferred to absorb this refund payment. The feedback that was provided to the members that performed that outreach indicated that a single payment was preferred. So I made that decision and authorized the Department of Revenue staff to prepare the payment and adjust the next monthly local option sales tax distributions to the local governments in Floyd County. Understandably, there were immediate questions, concerns, and requests for information that were directed to the Department of Revenue. In compliance with the statutes that the Department of Revenue operates under from the state of Georgia, and in conference with the Department of Revenue's General Counsel and the Office of the Attorney General, we responded to the questions that were put before us in the inquiries in a timely manner. The members that are here today with me will go into the further detail about the statutes that oversee our practices as far as audit, and also the statutes of confidentiality that we have to abide by when we're operating in our audit practices. Mr. Chairman, if it's all right with you at this point, I'd like to pass the microphone to my General Counsel, Mr. Frank O'Connell, so he can give a bit of an overview of the audit statutes that we operate under. Thank you.
Mr. Chairman, members of the committee, thank you for having us here today. Obviously, I'm not going to read over these statutes, but I thought it would be helpful because these are the statutes that bear on the issues at hand, and I've grouped them into 4 areas: the Commissioner's authority, the Department's authority to enforce the Public Revenue Code, refund claims and interest statutes, statutes of limitation and waivers, and then finally taxpayer confidentiality. And you've got them all, I believe, on your iPads, just to make it easier when you ask questions to get into those statutes and get where you'd like to be. Just in general, as far as the Commissioner's authority to enforce the Public Revenue Code, the Department has no more authority than you provide through legislation, and the principal power to enforce the statutes are in the administrative section of Title 48 in Chapter 2. And it gives us the ability to audit, to examine books and records. If need be, we can depose, perhaps subpoena information that we need. And also in each sales tax article, and that's what the principal concern is here today, each sales tax article makes the commissioner the exclusive administrator for that particular local sales tax. Now, I'm just going to generally mention the refund issues. Again, you have them in front of you if you want to use them as source for a particular question. But the rate of interest has been 12% for some time on both refunds and assessments, and the statute of limitations is 3 years from the date of payment. With respect to income tax, it's the later of the date of payment or the due date for filing the return, and in that way the estimated payments are considered to have paid on the due date of the return or the extended due date. And just one provision in the refund section that bears on interest. The interest rate, as I mentioned, for refunds is 1% a month or 12%. In the last decade or so, the legislature tried to cut down on interest where it appeared that the taxpayer had some control over when it made a filing or refund claim. And so, for example, any time that in order to take advantage of a sales tax exemption, the high-tech exemption, for example, if you buy $15 million in high-tech equipment, then that amount is free from sales tax and anything over that, but you can get a certificate from the commissioner ahead of time, use that and not pay interest when you purchase. The statute was made so that if you fail to do that and you come back later to get a refund, you still wouldn't get interest because you had the opportunity to get the certificate and not go out of pocket for the tax in the first place. The general limitations, as I'm sure you know, is a general 3-year statute of limitations. At issue here is the question of why it can take some time before claims are resolved in the course of an audit, for example. And of course, the first answer to that is the statute can be extended by waivers that are signed by the taxpayer and the Department of Revenue. And there are reasons for that, and my colleagues are going to go into those. But it's not unusual for that to happen. When we start an audit of a taxpayer in sales tax, for example, we might go back 3 years, and the oldest period is just about 3 years old. It's about to go out of statute. And so, as my colleagues will tell you, they want to secure a waiver right off the bat to preserve that period so they can look at it and figure out what we think the actual tax liability is. Also in that section are the statutes for proposed assessments and final assessments and appeals. And I'll just note that the statute stays open, or I'm sorry, it runs until we make an assessment. So our 3-year time for making an assessment from the date of payment is running from that date, unless we sign a waiver or unless we assess and we go through an audit. We might waive the period so that we can take a better look at it. We still have to keep an eye on the statute of limitations because we haven't assessed yet. But when the taxpayer files a protest to a proposed assessment, that will toll the statute until we respond to that protest. If we deny, for example, a refund claim, the taxpayer may protest the denial, and then after a year, if we haven't responded, the taxpayer can appeal to Superior Court or the tax tribunal. And if we do respond after the period of a year, the taxpayer will get some additional time to do a court filing or a filing in the tribunal. We'd also like to touch on the issue of taxpayer confidentiality. Probably the more critical issue in this case. I'm going to wait until after my colleagues talk about how they set up a typical audit and why we make the decisions we do to sign a statutory waiver of the statute of limitations or not. And so I'm going to turn it over to my colleagues.
Thank you. I'm Chester Cook. I'm the program manager for our audit programs in our audit division, specifically for all of our in-state audit programs. So I'd like to just talk a little bit about the audit process and the use of waivers. When we determine that a taxpayer is going to be audited, we contact the taxpayer, determine a time and place where the audit's going to be conducted. We would have looked at the periods that we would like to audit, and then we would follow up with a confirmation letter with the taxpayer, the records we're going to look at, the periods. Along with that, it is a standard practice on an audit initiated to issue a waiver for the statute of limitations so that the periods we're looking at don't continue to move, so we can look at those periods. The periods are open to make assessments, so we're not constantly chasing periods dropping off as one's adding on as you're looking at records. And as part of that waiver process as well, that extends the statute of limitations for assessments, and it also protects the taxpayer as well, because it also keeps the statute of limitations open as well for filing refunds. So as we go through the audit process, that gives us time to issue an assessment before the statute of limitations expire, and then the taxpayer then moves forward, pays the assessment and whatnot at that point. So that's sort of a standard scenario of an audit. As it relates to refunds, the audit group can get involved in really two other ways. A taxpayer may file a refund claim for sales tax for a certain amount in a certain issue, and then we may decide, well, we'd like to review the refund claim. So we will perform a desk audit on the refund claim. Instead of just issuing it as an amended return, we'll actually audit the transaction for which the refund is sought, and we do that because we like to review to make sure it's in compliance. As the refund gets larger, sometimes we can look at detail, determine things, maybe they're eligible or not eligible. So we'll do a desk audit just on the refund side, and then proceed through that, give the taxpayer their results, and move on. In terms of a waiver in those situations, if we're just going to audit the refund claim, we typically wouldn't extend a waiver because we don't expect that we're going to end up in a net assessment. So in that case, we get the refund in. We just want to review the refund, work with the taxpayer, and get the refund out the door. The sort of third way that it comes involved would be a refund claim is filed, and then we decide we're going to initiate an audit at the same time. So at that point, we'll decide if we think if it could end up in a net liability, that we're going to extend a waiver so that we can not just process the refund to which they're entitled, but also ensure that all the proper tax is paid for all the periods. So we're sort of looking at not just refund transactions, but also any underpayments which we sort of net together into a single assessment. So in that instance, we would issue a waiver. And there are also situations where when we get into an audit and we determine that it's going to end up in a net refund situation, where if there is a waiver in place, we may decide not to extend that waiver so that it doesn't keep the statute open for any additional refund claims, because under the statutes we're allowed to offset refunds. So we may decide at that point not to extend something, conduct an audit, find a liability to offset refund transactions, but it'll still end up in a net refund. So that's sort of the three scenarios in which we conduct audits where a waiver may be involved, as well as just how we handle refunds that we decide to audit, whether we want to do an audit accompanying with it or just audit the refund claim itself through a desk audit process.
Thank you, Mr. Chairman and members of the committee, for allowing me to testify here today. I am Anita DeGumbia, and I am the Assistant Director of Audit, and I'm here to talk about some of the internal and external factors that may cause a delay on part of an audit. I'm going to start first with the internal factors. Taxpayers are now doing more with less. in that their staff are taking on additional roles. Normally, you may not see just one person handling the audit function. They may be handling compliance. They may be doing special research. They may be involved in other factors within their given department. So consequently, them trying to provide and get documentation may cause a little bit more of a time delay. In addition, we're trying to locate books and records. When you're dealing with something maybe 3 years in previous time, that may cause a problem for them to try to locate the books and records, to find the invoices, or to find data, microfiche, computer system changes. We want to provide them with an amount of ample time to be able to get that documentation to us, so that way we can review it timely and hopefully resolve the issues. So those are kind of some of the issues that we see from that perspective. Now, the other external factors that we do face with audits is that as legislation changes, we may be in a situation where we're auditing a 3-year period, but we've had maybe 1 or 2 different statute changes on the similar issue. So consequently, we have to take that into consideration when we're reviewing the books and records to make sure that we are properly applying any type of exemption to the correct period, so we're not over-assessing or under-assessing the taxpayer. In addition to, similar to that, is court decisions, where if there was a court decision that came out that affected a certain transaction within that audit, we would have to make that adjustment to take that type of situation into consideration. So those are some of the internal and external factors that we do face, and we work with the taxpayers in getting things resolved at the quickest and most effortlessly possible.
Now, Mr. Chairman, with your indulgence, if Frank O'Connell could give a little bit of an overview of the confidentiality statutes, and then we would stand ready for questions from the committee. Thank you.
Thank you, Mr. Chairman. The confidentiality statutes are at 48215, and that typically applies to all taxes except sales taxes, income taxes, which is covered by 48760, and I'm sure you've looked at them particularly lately, but those 2 statutes, they broadly provide for the protection of any information that the Revenue Department either receives or generates in connection with an audit. And I'd like to point out that 15 says that information that is secured by the Commissioner incident to the administration of any of the tax types should be confidential and privileged. And 60 provides that it is in fact unlawful for the Commissioner or any other DOR officer or employee to divulge information contained in a return. In fact, the unauthorized disclosure is a misdemeanor that would result in termination of employment and a ban on holding office for 5 years. There is not a lot of case law. There's not a lot of guidance out there to say what a lot of these terms mean. But one term that we have to answer the question on very often is, what is protected, what is return information? Fortunately, there was a Georgia Supreme Court case on that question in 1995, Bowers v. Shelton. And if you'll indulge me, I'll just read one paragraph, which is describing all the things that come under that heading of state return information. It means a taxpayer's identity, the nature, source, or amount of his/her income, payment, receipts, deductions, exemptions, credits, assets, liabilities, net worth, tax liability, tax withheld, deficiencies, overassessment, or tax payments, whether the taxpayer's state return was, is being, or will be examined or subject to other investigation or processing, or any other data received by, recorded by, prepared by, furnished to, or collected by the agency with respect to a state return, or with respect to the determination of the existence or possible existence or liability or the amount thereof of any person under the Internal Revenue laws or related statutes of the state for any tax, penalty, interest, fine, forfeiture, or other imposition or offense. It's very broad, and as I said, we don't have a lot of authority to go by. it turns out that Bowers v. Shelton involved the question of whether the department's audit or investigative file on a taxpayer was subject to the State Open Records Act. There you had a clash of competing policies, and the Georgia Supreme Court identified those policies, and to quote them, they said, while this state has a strong policy of open government, there is a corresponding policy for protecting the right of the individual to personal privacy. And in referring to the effect of the Open Records Act on taxpayer confidentiality statutes, the court said, the act requiring the inspection of public records has in no manner abrogated the mandate of OCGA 48760 that tax information be maintained inviolate. And finally, in its ruling, the court held that the information that was contained in that taxpayer's file consisted of confidential tax information which was not subject to disclosure under the Open Records Act. Now, the statutes also contain exceptions to disclosure, and there are at least 5 specific instances listed in 48-2-15. The first exception provides that the confidentiality protection won't be construed to prevent the use of taxpayer information involving the liability of the taxpayer. Well, if there's a suit and we go to court, yes, the taxpayer's information is going to be in open court, and the Attorney General, in defending the department, can provide those returns as evidence. And another exception, and one that's relevant to this inquiry, allows the department to print or electronically publish statistical information arranged so as not to reveal identity of a particular taxpayer. Now, as an example of that, and some of the information that we're dealing with here, you should have on your iPads the most recent monthly distribution list, and it includes not just every county but every jurisdiction that receives a distribution. And in that table, it lists the county, the jurisdiction, for example, a school board, the amount of the distribution being received, the tax type, the dollars on the returns that were filed in that period, amounts that were billed to taxpayers and paid during that period. It has an amount for the result of audits that can either reduce or increase the distribution, adjustments, and finally the 1% state administrative fee. So this is the type of information that we can, well, in fact, it's right on our website, and so it's open to the general public, and it's a good illustration of the type of information we could disclose under that exception. In summary, the general rule is that taxpayer information can't be revealed unless we can point to a specific exception, and we take it very seriously. I think we probably contact the Attorney General's office as much on issues of taxpayer confidentiality, both in answering Open Records Act requests, in responding to subpoenas from courts, in any other manner in which these questions come up. And we also have training yearly for every employee. You have to take a test on taxpayer confidentiality, and so it's very critical to doing our mission. Thank you.
Thank you, Mr. Chairman. I hope the information that myself and my colleagues have provided can give the members of the committee an overview of how we operate, and understanding that this particular situation did not cause us any degree of comfort. We recognize the problems that the local governments have encountered and have great empathy for that. And we look very much forward to responding to what questions we can under the guise of that which we, by statute, are allowed to share with the committee, and to have a substantive conversation on what the future might hold. Thank you.
I think we're going to have a few. First question, tell me as far as the local share of principal and interest that was involved in this case?
The total amount that was refund to the state, to the locals, the tax amount was $2.553 million. The interest was just about $1.42 million for a total local refund adjustment of $3.969 million.
And that is, if they don't write you a check, is taken out of future splost and lost and e-splost distributions. Is that correct?
The normal way of adjustment is to adjust the next lost or local option sales tax distribution. As Frank O'Connell referenced in the reports that we run every month, you will see a column for adjustments for each local jurisdiction that may be affected to audits or other adjustments made during the course of the remittances by our vendors.
How much was the state portion?
Mr. Chairman, could I have Warren Calvert from the Attorney General's office respond to that?
Mm-hmm.
Mr. Calvert?
Mr. Chairman, the Revenue Department's website that refers to these types of distributions, that's not the type of information that's currently published. I'm not sure that I could state here that wouldn't be subject to the confidentiality protections.
Wait. You can tell me how much was repaid by the locals, both the 3% and the interest. But you cannot, because it's confidential, tell me what the 4% plus interest that the state owed?
Well, I'm not confident that I can say here today that.
Why would that be confidential and the other is not?
Well, again, Mr. Chairman, I'm not sure that I'm confident stating today that that's information that could be disclosed.
This is not going well.
Well, Mr. Chairman, if I could simply reiterate what Mr. O'Connell said, the difficulty we have and the department faces in cases like this is there's precious little case authority regarding the way these statutes are provided, the way these statutes are applied. I mean, we don't typically, when we get questions like that from the Revenue Department, answer them without giving them careful consideration, and I typically would run a question like this further up the flagpole in my office.
Well, my understanding is, and I don't want to be argumentative about this, but my understanding is that Floyd County basically has a lost, a splost, and an e-splost, which is basically 3 pennies, just like the rest of the state, most of the rest of the state. And the last time I checked, the state charges 4 cents. So the math ought to indicate that it's like 4/3 or something like that. And if it's not, then I got a question about that. But I don't understand what's confidential about 4 pennies versus 3 pennies, that 3 pennies is not confidential and 4 pennies is.
Well, that might be the correct answer, Mr. Chairman.
I bet it is.
But again, when I get questions like this from the Revenue Department, I give the response to that answer after I have vetted it within our office. So again, as I say, these code sections have next to no judicial gloss on them, and the consequences of answering the question the wrong way can be significant. The statutes provide, there's explicit the statutory provisions in the in Chapter 7 of Title 48 refers to civil and criminal penalties. that's why the department is cautious in what it reveals, and why I'm not comfortable answering today that question. It may be that the answer is exactly as you think it is, but again, I can't tell you today that I think that's the right answer.
I got a few more questions, but we'll wait and see what the other committees have. Representative Kelly.
Thank you, Mr. Chairman. I just have a couple questions, and I'll be brief here. We talked about the 12% interest rate, and you acknowledge that that's been on the books for quite some time. How long?
The statute that it refers to this was last adjusted in 1980.
1980. Do we have any idea what prime interest rate was around 1980? It was a couple years before my time, admittedly. But I'm trying to
Representative
just
Kelly, I can only answer that anecdotally. The first mortgage that I took in 1981 was at 15%.
Okay.
If that provides you with a reference.
So my thinking is that the original 12% interest was never meant to be punitive, which it's turned into now, because prime's well in the single digits now, 2-3%. I'm not exactly sure. I think you can get a loan at a bank for 3 or 4% on a mortgage now. I'm not talking about the discount rate you get, but my question is one, do we think maybe that needs to be adjusted in statute first? But then second, I want to make sure I understand correctly that where the mistake was made. I know you can't tell us the name of the company, but was it the company that overpaid? Was it the state that made a mistake, or who? What happened here? Was it the company that overpaid?
Representative Kelly, with all due respect, unfortunately, that's similar information that is not subject to disclosure at this time. We would defer that to the Attorney General's office to consider whether any response to that might be a violation of the statutes that Frank O'Connell read that speak to all of the components that go into an audit. And therein lies part of the heartburn that we have seated before you today. The rules are so as they are that make it difficult for us to be able to be responsive without fear of violating that confidentiality statute and putting the department and in that case the state of Georgia at risk.
Let me interrupt. Are you telling me that making the statement that the taxpayer inadvertently or intentionally overpaid versus the department made a mistake and overassessed in any way discloses the identity of the taxpayer?
I think Mr. Calvert's ready to answer that one.
If I can help with that, there is federal authority. There's a U.S. Supreme Court case interpreting similar provisions that protect the confidentiality of information that the Treasury Department has. That says the fact that the mere fact that you could delete a taxpayer's name or other information that would tend to identify the taxpayer is not sufficient to remove that material from the confidentiality protections. Which is to say, for example, if my income tax return could be redacted in a way that it showed my income, my deductions, but it didn't show my name, didn't show my wife's name, didn't have my Social Security number, didn't have any information where you could take that return and say that's Warren Calvert's return. That return would still be confidential.
I agree with that.
And that's the problem here.
I mean, if you showed an interest deduction of $1 million and you were the only one in the whole county that had $100 million mansion, then I would agree with you. But if your tax return showed a $6,000 interest deduction and that could apply to 50,000 people in the county. And my question is, how can answering the question as to whether the taxpayer made a mistake or the department made a mistake identify the taxpayer?
Well, that's my point, Mr. Chairman, that the fact that that information would not tend to identify the taxpayer doesn't mean it's not taxpayer information. Again, back to the example with my return, I can state in my place that I have an unremarkable income tax return. There's not going to be any information on that where you could look at it and say that's Warren Calvert once you've deleted my name. But that is nonetheless protected taxpayer information that can't be disclosed under our law. As a consequence, the fact that some of these questions may not be designed to determine who the particular taxpayer is not sufficient to remove the protections of the confidentiality statutes, and that's simply the.
Would it be helpful if we rewrote the statute to give you some clarity?
Certainly. I mean, it would certainly be my.
I think we can do that.
I mean, there are a lot of places where these statutes could be clarified, but as the statutes stand now, the mere fact that you could redact taxpayer identifying information from an income tax return, a sales tax return, the various returns that the Revenue Department gets, is not enough to remove the protections of the confidentiality statutes. If it were, for example, the Revenue Department if the Revenue Department got an open records request saying, I want to see every income tax return filed in Georgia where the adjusted gross income is below a certain amount, just redact the taxpayer's name and other identifying information. If that were sufficient to remove the protection of the confidentiality statutes, the Revenue Department would have to search its records and pull all those returns. I mean, that's what the Revenue Department has to deal with.
I'm not asking you to search anything. I'm asking you who made the mistake. Never mind. We'll move on. Representative Beasley Teague.
Thank you, Mr. Chairman. Well, I'm going to ask the question. You may not be able to answer it.
I'd say there's a good chance.
Yeah. Well, Commissioner, I want to say congratulations on the new position. I guess you have written the largest check of any commissioner since I've been in the legislature. If I could only figure out, since you can't answer any questions as to why are you here, since you can't answer questions, but don't answer that. I'm sure somebody must know somewhere. And my real question was, how could you do an audit? Well, usually when I see people doing audits in your department, it takes a long time, and the person that's the constituent usually just go ahead and move on. I see why this person didn't move on, especially since you can't tell me who's at fault for the error. So have you changed any policies where people have to definitely get the audit done and get it done reasonably so you can report back and get to the constituent? Because that's something we haven't been able to do in the state of Georgia, and I've only been here 44 years. I don't know about anybody else. So have you changed policy to get that done like that?
Thank you so much, Representative Beasley Teague, for that question. I believe that is the reason we're here today, is to talk about some of the challenges that the Department of Revenue currently operates under, and to be able to share with the committee some of the constraints that prohibit us from sharing information, as well as constraints on our abilities to perform at peak efficiency. So we're open to any conversation. Because of this situation having occurred within the last 60 days, no policy decisions or changes have been contemplated to date, but we would very much like to engage in a substantive dialogue to that effect.
Thank you.
Thank you. Representative Harrell.
Thank you, Mr. Chairman. This may be for our, well, let me address it to you first. Totally unrelated to this case, we believe some taxpayers may have taken advantage of this interest rate that goes both directions, 12%, in the past. Is there a policy or statute that allows the department, when it is determined that there was an intentional overpayment for the purposes of making a good investment with cash on hand, that the department can anyway return that overpayment absent the payment of the interest?
If you'd allow counsel to confer briefly.
Yes, sir.
I've not looked at that specifically. I do recall that I may have seen some federal authority in the past on the Internal Revenue Code, and I'm not sure if it's an Internal Revenue Code provision or if it's federal case law that that there may be circumstances under which what is claimed to be a refund of taxes is treated as something other than a refund because you have in effect sort of placed the money there. Again, I've never researched the issue in any kind of depth. My recollection is based on something I ran up on many years ago. But what I take from that is that it may be possible with an appropriate statutory provision.
But we're not sure that statutory provision exists in Georgia yet.
Not
today.
to my knowledge.
Okay. Okay. Does the department have an opinion, again, unrelated to this particular case, on whatever the appropriate index and margin is to moving to this interest payment in both directions to a floating rate?
Representative Harrell, we have no opinion. We operate under the 1% per month
right, exactly.
rate that we must assess on over or under payments.
Okay, very good. Thank you, Mr. Chairman.
Following up on that, is this compounded?
No, sir. It's simple interest.
Okay. So it's not like a credit card where you take the balance and then you add 1% and then create a new balance, and then 1% of that creates a new balance. It's strictly 1% on the principal. Okay. Chairman Houston.
This 12%, doesn't it go both ways? If by some reason I didn't pay my income tax, wouldn't I have to pay you 12%? The county and the city, doesn't it go both ways? Is that how much they charge?
Thank you.
Not paying property tax, this sort of standard 12%.
Thank you, Chairman Houston. The statute does refer to 1% for the state and all local taxing agencies.
Is it not true that this was sort of brought up? Was it last year, year before last? And do you remember it being brought up? And some people did not want to give the taxpayer the same break that we were giving the county and city, and we had a little problem with that. We thought it'd all be the same. And that's one reason we couldn't move on it, because we couldn't decide. Do you remember anything like that?
Chairman Houston, a bill was introduced in the session in 2015. I don't know the posture, but I do know that it was introduced, and it only applied to underpayments or in favor of a taxpayer, but not a consistent adjustment of interest rates for taxing authorities as well.
And it was sort of consensus of the committee that it needed to go both ways, I think.
I do not recall if there was a hearing.
That's one reason we didn't move it. Is there any way, if we did move something like this, that we could set it at, say, prime plus 2 and have it at the first of the year, set the interest rate since the interest rate?
We could do that.
I'll co-sign your bill.
Okay, thank you.
Chairman Houston, I do believe that is the pleasure of the General Assembly to make that decision.
All right, thank you.
Representative Duncan.
Thank you, Mr. Chairman. It's moments like this I wish I went to law school to try to navigate this confidentiality situation that's out there. My question is it important to the department to assess, blame, or to evaluate how the error happened outside of this case, just in general? Is that something that is important to you as to how you evaluate part of your audit process,
Or is that just a binary number? There was an overpayment, underpayment, and so you move forward with a certain list of procedures.
Representative Duncan, we take every opportunity to learn from the experiences we encounter during an audit. So I would say that yes, we do carefully look at what factors might attribute to a refund to be issued or an overpayment or an assessment to be issued to a taxpayer. Each case tends to be very unique, and we would be looking at all the factors that might contribute to why an audit period extends or why an assessment might be issued that might result in the taxpayers protesting and subsequently going to Superior Court or the Georgia Tax Tribunal. But yes, we do look at all factors and take them into consideration when we're looking at how we can better our practices.
As a follow-up to that, because I look at if a taxpayer has made a mistake, miscalculated, and created an overpayment, we now have an enormous amount of admin fees and a burden as to how to process through this. And so I just look at, there's a number to figuring out the right way to move forward in this, an amount that's out there. So that's why I asked that question.
Thank you. I think you're right.
One last follow-up. So outside of this system works, this audit system works, and going back to the cities and counties, is it just the absorbent amount of money in this particular case that has made this so different? Then, because I'm looking through this spreadsheet that's here, and it looks like every county and city and school board has a slight settle up, $100 here, $1,000 here. Is it just the fact that this is such a large amount of money that makes this so much different?
I think that's safe to say.
Okay. Thank you.
Would it all, but I think that either I've read it in the news media or elsewhere, that this has been going on since 2005. Is that correct, or is that confidential too?
I mean, it would generally be confidential. Yes, there are cases where old tax years are at issue. For example, and one that's in the public domain now is the Rosenberg case decided by the tax tribunal at the end of last year. And that was the end of 2014, and the first tax year it involved was 2008. So we frequently are dealing with older years. But I wouldn't want to go into the years on that taxpayer.
But assuming that it were 2005, which is what I have read, the size of the overpayment or the refund claim, plus the fact that it has been dragging on for so long, did both of those just make this an unusual type case? And I understand that once you found out about this case, you made an inquiry as to, are there any more like these that are going to come out and surprise me, and tell me what you found out.
Thank you, Mr. Chairman. Yes, once this was brought to my attention for consideration of resolution, I did immediately ask for a status report on any other audits that are currently under work at this time, and that information was provided to me, and the charge I put back to our audit team was to look very carefully at them immediately, and let's have a subsequent conversation about what the exposure is to the state of Georgia on each and every one, and then us consider what best courses of action to take.
So does that mean we're going to try to do them quickly?
For the factors that we have control of, more quickly, yes, sir, most definitely. For the factors of which we have full control, most definitely. With external circumstances, for example, court decisions that might require a revisitation, we will do that as expeditiously, of course, as we possibly can.
Chairman Knight.
Thank you, Mr. Chairman. To start off, I am a little confused between being able to disclose the local versus the state, but aside from those legal issues, I got one question. What is the statute of limitations on a sales tax return?
The normal statute of limitations is 3 years.
So why, and I guess just popped up with the chairman's, should there be a taxpayer that it goes back past 3 years, are we waiving that to go back past 3 years, or is that, or would that be an open and shut case? You know, your statute of limitations has run out. You can't change that.
If you would allow Chester Cook to
absolutely.
comment again, I mean, he spoke to it in his comments
Yeah.
about circumstances that would, require a waiver that
And
would
that's the
preserve our
exten- but is that
rights.
the extension we're talking about?
Correct.
Okay.
A couple things. Yeah, so that's the extension we're talking about, the waiver of the statute of limitations to keep the statute open in order to issue an assessment.
Keeping it open or carrying it back?
Open.
But not carrying it back. So we're in 2015. Say somebody comes in and the year is 2012, 13, and 14. You know, are you, with the statute of limitations? I assume going back 3 years after, prior to that, it's closed, right?
Unless a waiver is
Unless a waiver, and that may answer the question, and that may be more details, and I think we may be able to get in on this particular case. I do have some comments though, and one is. One, I know we've talked about confidentiality, but I want to remind the committee and everybody out here, we are a voluntary. Taxes are voluntary in this, in the United States and in the state of Georgia. So we volunteer, it's a voluntary system. So I do. Well, this seems to be, we're going excessive on this, but I do appreciate the confidentiality, because once we break that confidentiality between the taxpayer and the state of Georgia, the Department of Revenue, I will guarantee you taxes are going to be much harder to collect and administer that relationship there. So from that point of view, I do appreciate some over caution here, if that is indeed the case, over caution with that. As far as the mistake, I don't know if we can talk about it here, but as a voluntary, in most cases, I'm talking here in the broadest of senses, in most cases when taxes are filed, they're voluntary, unless there's some type of assessment. So in the greatest amount of instances, the taxpayer has initiated the return, correct? This is broad, this is not in this case, but in a broader sense, the taxpayer has initiated that. And so, it is a voluntary system, and without knowing the facts and details of this, which we can't know, I would just remind everybody that in the bigger sense, as we think about policy, probably in most cases, the tax return has been initiated by the taxpayer. Okay, but so I would just sort of take that into account, the bigger picture, and as far as the percentage, I think we could cut out a lot of this conversation, and this would be for the chairman and this committee's General Assembly to go back and look at. But we need a rate that's equal on both sides, that's more commensurate with what the market is doing, because after all, it's interest. It's not a penalty. It's interest. It's the time value of money. If I'm saying that right. And that could probably help a great deal, because as it's been stated by other representatives, we got people out there gaming the system and gaming the state of Georgia. And quite frankly, if I could make 12% interest a year on something, right now that's probably the best, surest interest that you could make. So I would hope that maybe we'll come back this year and start to address on that, and maybe that'll take some of maybe the economic issues out of this, because when I do see $1.42 million in interest, that is just absolutely unbelievable, and as we compare it to what the real market is in the last
Let me ask you a question, because you've been involved as an accountant in the issue of confidentiality, whether it's income tax returns or otherwise. But what I'm hearing from the Attorney General's office is that our statutes are written in such a way that it doesn't only prohibit the release of information that could potentially identify the taxpayer, but it prohibits the release of taxpayer information, which in my opinion, and correct me if I'm wrong, is way too broad for what we need to do. Taxpayer information as in whose mistake it was. That's taxpayer information. That's not identifying data.
Mr. Chairman, you get into a sticky wicket. I just know as a tax preparer, the Department of Revenue will not even talk to me. You know, I'm sitting in there with a tax return in front of me, and I call up regarding a notice, and I don't do it anymore. I go get a power of attorney. I mean, they won't even talk to me. I mean, regardless, they won't even acknowledge the client, period, until I've got a power of attorney.
But that's identifying a specific client.
Yeah, it is.
But maybe if I understood right from the attorney, that information I put on that tax return, that's my information. I own that. And I'm sharing that information voluntarily, in your words, submitting a form. At least that initial act is voluntary as a taxpayer, and I'm volunteering giving a particular department of the state my information under the understanding that you will maintain that in strict confidentiality, and not just take my name off it, but then share somebody I gave $100 to a church. That's my $100 to share with you, not to share with anybody else. And I think is that how I understood it, that it's the taxpayer's information. It's even though the state is in possession of it to use for legitimate state purposes, it's still my data, isn't it? You know,
We're bound by statute to protect that information.
Yeah.
We can change it.
Yeah.
Okay. Chairman Rice, where are you?
I'm the one with
There you
their
are.
eyes glazing over here in the front row. I just have a couple of things that I think you can answer, hopefully. And that is, how many cases where there are overpayments in play or pending right now?
We can answer that.
How many refund claims do we have?
Yeah, overpayments. And do you have a total value on that?
Well, we could certainly come up with it, sir, because we can run reports out of our system. and
Yeah,
tell you-
okay. Well, so you don't have that data right now is what you're saying. What's the average time it takes to do an audit on an overpayment?
Chairman Rice, I think that's a problematic question because it can be something as simple as a $100
Okay.
underpayment or overpayment.
But then how do you staff to that if you don't know what the metric is on the average?
Well, we have metrics that we use to assign the cases to the different personnel within the agency, certain dollar thresholds, certain tax types, and then we disperse those cases accordingly. Certain cases that are of significant complexity will go to the higher levels and skilled auditors to work on. And then, of course, depending on the volume of the transactions, if it's a sales tax case, it could be an extensive amount of data review and time period that it takes to perform.
What's been the interest payment, and how does the interest payment recognized? Is it recognized in your budget request, or how does that come out?
It is a line item in the state appropriations budget. There is an interest exposure.
And what's that been? Do you remember? Do you know what that is? Don't worry. If you don't have it handy, that's fine.
We
can
do
get it.
have it. It's and actually I shared it with the chairman. Did you distribute that, Mr. Chairman? The interest overpayment and underpayments. I'm so sorry. Yes, you have that before
Do
you.
I? Okay, I didn't bother to look. Well, I guess my point here is that in trying to do legislation on this, I don't think we ought to be dealing with one case that's brought up. It should be multiple cases that have, and if we don't have the information on that, then that's more difficult. So the metric is important in terms of a general metric. And Mr. Chairman, I would suggest that if the taxpayer wanted to come and be a witness in front of this committee, maybe they could divulge the information that you're looking for.
Mr. Chairman,
novel idea.
Chairman Rice, I agree that I think that great policy decisions that could be made by this committee and members of the General Assembly, and I think that you brought to light some of those decision points that I think will be of concern.
Representative Rutledge.
Thank you, Mr. Chairman. Just for my benefit, I'm a business owner, but I don't
do sales and use tax. Maybe after Representative Carson's finished.
Are you supposed to?
No. But my question is, logistically speaking, how are these taxpayers submitting these? Is it a paper form? Is it electronic form? How are the payments submitted?
Are you talking in general terms of payments or claims for refund?
No, the actual
return.
Is it monthly? Is it weekly? Is it
monthly? It depends on the tax type. What we have is we have certain dollar thresholds for which require we mandate electronic filing, which is by statute. And then, for example, withholding may have different due dates for when those payments are due.
Okay.
Sales tax typically for an electronic filer is going to be monthly.
So you receive electronic funds? Do you receive checks from? Okay, and with those payments are forms attached to those payments?
Yes.
Is anyone looking at these forms?
Absolutely.
So if you have a process of a form coming in with a payment, and you know what the tax rate is, why isn't that the only audit you need?
Representative Rutledge, thank you for the question. Sometimes laws change that would apply to taxability or tax exempt status of something for which collections had previously been received by the state. Sometimes there may be an error in collections that is done by a merchant or a vendor and not recognized until after the fact. Sometimes a merchant or vendor realizes that they should have been collecting sales taxes on sales and will make calculations subsequently because in certain cases the merchant would ultimately be liable to remit to the state if they did not collect according to law.
Representative Flood.
Thank you, Mr. Chairman. I apologize. I came in a little bit late, and like Chairman Rice, I'm trying to grasp this issue. And I read something that was in the Rome News Tribune, and I just wanted to see if you could just say if it's accurate or not, because I think it at least helps me to understand what the issue is. And it says that the Department of Revenue has informed finance officials in Rome and Floyd County of a sales tax refund request and a settlement. The information provided from a local business, the business made an accounting error from 2005 to 2012 in the amount of $3.9 million for various taxes. The reason for the refund request was due to an accounting error on the part of the company requesting the refund. A second refund settlement is being discussed. Is that news report accurate?
As you know, we can't comment on the specifics, but I do want to comment on the general because I really agree with Chairman Knight's comment about the voluntary nature of the system. We don't send sums of money out to people. They send sums of money to us, and then they figure out they sent too much. And I've seen it happen a couple of times. I've been at the department for 12 years, and I've seen it happen a couple of times where taxpayers' systems coded something as taxable, and they sent a lot of money into us, and then they send us a big refund claim. So that's typically how it happens. And I can't get any more specific than that, but in the 12 years I've been at the department, there have been a couple times where I know some small refund checks were misaddressed, and so we had to get them back, and maybe somebody even cashed a refund check that wasn't theirs. But by and large, the money comes in to us, and then somebody asks for it when they figure out it was a mistake, or they believe it was a mistake, and then we have to see if we agree with them.
Going back to a previous question, what is the internal mechanism to reconcile these payments that are coming in? Is it incumbent upon the taxpayer to recognize the error and then make an adjustment, or does the department look at the returns and say this form is inaccurate either because it was underpaid or overpaid?
It would be really difficult for us to see a mistake if a taxpayer submitted a return and they said they owed $1,000 of taxes and there was a $1,000 payment with it. That wouldn't stand out, I think, no matter what kind of business filters that we had with it. Now we do audit, and we select an audit population, and now we can do as good a job as we've ever been able to do of looking for characteristics to figure out we need to go and check that out. But otherwise, if the money agrees with the return, it's going to be tough for us to see that there's an error.
Sure. And so what percentage of the returns that are filed are audited?
Representative Flood, I couldn't give you an exact answer on that, but what I can tell you is that in recent years, the General Assembly has appropriated funds to put in a integrated tax system for the Department of Revenue that we can now use to perform data analytics and identify when anomalies occur in tax returns that will trigger a notice to us to look further into that particular taxpayer. So we have those new tools at our disposal to try to get ahead of some of these errors that might be performed in the remittance to the Department of Revenue, and we're grateful to have those new tools available to us. But we do rely on the voluntary disclosure and remittance of taxpayers, and so unless anomalies jump out at us, we would not likely scrutinize every return that's submitted.
Sure, but in terms of the audits, is it 2%, 10%? What percentage of the returns?
Our average would be somewhere between 1% and 2%, and that's based on best practices to try to maximize the resources that are provided to us by the General Assembly and what the expected return on investment might be. It's generally known in industries that that's about the sweet spot of being able to capture the most potential tax avoidance, and the data analytics that we now have at our disposal will help us hone in even more closely so that we wouldn't be using a scatter approach to try to identify where there might be discrepancies, but we have better metrics and better tools to be able to hone right in.
Thank you.
Representative Knight.
Thank you, Mr. Chairman, and maybe just a point of clarification, Commissioner, and it probably piggybacks off Chairman Rice's comments and Representative Flood's comments. Going back to the audit and the audit process, some time and maybe a little more description of that. And I think, as we heard earlier, sort of a 3-tier. But when we get into the way I heard it, and again, I want to make sure I'm stating this correctly and clarifying it, but when you get into a larger issue such as this, there's been a refund, requested. That on very large sums, and obviously this is a large sum of money, that the department then is going to go back and say, okay, we're going to audit this, but we may also audit your payroll, your income tax. What else are we doing? Payroll, income sales tax. In other words, this is such a large amount, we're just not going to give you $3.5 million. You may be over here, behind on your payroll taxes, or you may be behind on your income tax. So I think that may help the committee understand that from a time perspective, when you get into these large sums, the state is going to make sure they're not just turning over $3.5 million when they may be owed $500,000 or some other large sum of money. They're going to take the time to make sure that before this refund is issued, that the taxpayer is in compliance with all the other tax laws and is up to date on tax returns and is clear before they issue that. So I think in these large types of circumstances like this one, that may be why the audit period is longer. And then again, the underlying data, you're not necessarily auditing one page. That's what the report was that was sent in. You've got to go back and then pull the data that supports, it's the underlying documentation that supports the tax return, sales, sales exemptions. What's a property, or maybe you're selling to some folks that have a sales tax exemption and some folks that don't have a sales tax exemption. So you're pulling records. You're doing all that. Is that a good clarification?
Chairman Knight, I think you've clearly encapsulated the provisions that the state statutes allow us to operate under. And with the new integrated tax system that provides us the ability to look more holistically at a taxpayer in Georgia, regardless of size, but depending on whether there might be something that comes to our attention that is worthy of additional scrutiny.
It looks like we're close to done. All right, I got a couple of questions. As I understand it, the department on behalf of local governments collects whatever kind of local sales taxes that they have in place, correct?
That is correct.
And then the department keeps the books, correct?
That is correct.
The department remits the money to the local government.
That is correct.
And if there is a claim for refund or an audit or whatever it is, the department does that.
That is correct.
And if there is money owed by the local government back to refund to the taxpayer, the department notifies them, correct? You did this time.
This time we did, yes.
And then they pay it, whether voluntarily or from freezing of any kind of future remittances.
It's generally from an adjustment to a subsequent payout.
And if the local government wants some information about, are y'all sure? Can we double check the numbers before we write a check? Can we have a little bit further information? Then that is protected under statute. I'm not blaming the department. That's protected by statute, correct?
Mr. Chairman, you are correct.
And so basically the department is paid a 1% administrative fee out of the local option sales taxes of whatever variety that it collects as an administrative fee to do all of this work, correct?
That is correct.
So why is it that if the department cannot share information, the department does all of the work, and the department is paid for the work? I can understand the refund as far as the principal portion of the overpayment, but why is it that a local government has to pay the interest when they have no say-so, no double checking, no oversight, no nothing? Why do they have to pay the interest? Other than the statute requires it. Is there a policy reason for that?
It is according to state statute, Mr. Chairman.
It's a policy that is in state statute, which this legislature can change if they feel like it's unfair.
That is correct, Mr.
Okay.
Chairman.
Representative Harrell and then Representative Houston. No, wait a minute. Representative Harrell blinked first.
In thinking about that future policy, unrelated to the issue we have right here, if an error in overpayment through sales taxes is made to the department and funds were remitted that were never collected from the consumer, that seems to me to be one issue. If the funds were actually erroneously collected from the consumer,
Are you talking taxpayer?
it's a taxpayer. Well, the consumer at the sales the point of sale, the sales tax revenue, and then remitted to the department, and then that business is returned erroneously charged sales tax money plus interest. In this instance, the individual business potentially has profited greatly because I don't know where the mechanism is to get it back to the consumer that may have paid it and erroneously in the first place. So there's two kind of policy questions. You know, was it reported erroneously but never actually collected from the consumer? And then the second policy question becomes, was it actually erroneously collected and then returned? So my parting 2 cents to ponder.
Actually, I like that. Chairman Houston.
Mine's a quick one. Not that I'm trying to find out who got the money. But I have been real pleased at the way the Department of Revenue works with local and county governments to make sure everybody pays sales tax. And I know in my district, we work with the you can, and I'm not sure if Floyd County does this. Do y'all send in the who has a license and they correspond who's paying sales tax for the license? Just I don't know who I should be asking this, but does that tell you how much they pay, or if just they're paying? I haven't looked at mine.
Chairman Houston is referring to our BOTS program.
Yeah.
It's the Business Occupational Tax Submittal
Right, and
system.
I appreciate y'all doing it. If your constituents aren't doing it, they need to do it. And if Florida County's not doing it, they need to do it.
Local governments can remit their databases to the Department of Revenue of the businesses that have they've issued licenses to, and the department can run that against our databases and look for anomalies, and should we find them, then we will investigate why a duly licensed taxpayer in a jurisdiction is not showing up for some other liability in the state system.
Okay.
And it's a voluntary opportunity for local governments to do. On our website, there is a list of the cities and counties that have taken advantage of that opportunity. I've talked with GMA and ACCG and encouraged additional participation. Again, it helps us do our job better when we have targets to focus our attention on. So thank you for that question, Chairman Houston.
Well, I tell you, I got tired of people coming to me and saying so-and-so is not paying any sales tax and all this sort of stuff, so that's the reason I refer them over to the Department of Revenue. Thank you.
Thank you.
All right. To wind up, this is what I think we're going to do for the time being, and there will be other opportunities to discuss this. I'm going to appoint an ad hoc special, for this reason only, committee consisting of Representative Trey Kelly and whoever he wants to draft to serve with him, assuming he cannot get volunteers. Get your pen out. I'm not telling you how I want it to come out, but these are the things I want you to consider. Okay? I want you to consider the interest rate as to whether we need to go to a prime plus some number, and that it be across the board, treats everybody the same, which means that if somebody owes the state money, the state owes somebody money, or if the local government is owed money by a taxpayer. I mean, if 12% is too high and we need a floating rate, then we need a floating rate that's fair for everybody. Okay? I want you to look at the issue. I mean, we've talked about tolling of the statute of limitations, and I want you to look at that as to whether there needs to be some limitations on when we allow that to happen, because quite frankly, assuming that all of this started in 2005, that sort of really doesn't make me feel warm and comfortable. But I want you to also look at the issue of tolling of the interest rate at such time as the department has requested information from the taxpayer. I don't think that the taxpayer should benefit with receiving interest while the department is held up by the fact that they don't have the information they need in order to complete an audit. So I want you to look at that as a possibility of doing something. I want you to look at the possibility, especially as far as the local portion of this. If the local government does not have an opportunity to view any of this information, whether they in fact should be responsible for any interest whatsoever. And I also want you to look at the issue of confidentiality and see if there are things that we need to do to clarify that. Because quite frankly, I can understand that there is a desire for that, but at the same time, it's hard for us to evaluate the performance of the department as to whether you're doing things in a timely manner, whether you're overstaffed, understaffed, need help, need clarification, if we can't get some basic information. And I know that's not your fault because y'all are acting on legal counsel, but I'm thinking that we probably need to take another look at this, and I don't think y'all would consider that unwelcome at all. Knowing that there is some frustration from the local government standpoint that, you know, I get a letter from the department, I can't look at anything, I can't double check anything, and I'm not too sure that we should allow them to do that because of the confidentiality, but there should be some kind of double check, and I'm thinking that in certain circumstances that the local governments can request that the department's audits be double checked by the Department of Audits and Accounts to at least give a second pair of eyes so that you can get a second opinion even if you can't get an independent look at it. I want you to look at the possibility of requiring, I mean, you can't do it for $100 or $1,000, but some threshold that the department, if they get a claim for refund, can at least notify the local governments that, you know, there is this request. We don't know what's going to happen. We are going to audit it. But if it turns out like the request for refund is, you need to be socking some money away because, you know, when we send you the letter, it's going to be a done deal at that point in time. Now, there may be some other issues that come up during your investigation. I don't know whether any of these things pan out, but these are things at least I think you ought to consider because we aren't just dealing, we can't fix what's already happened. I mean, the law is set right now, but we certainly can try to mitigate this going forward as far as making sure that there is as much openness as we can have in the process and that we don't have any future surprises quite like this. Is there anybody else on the committee that wants to comment on the issue?
I think they just volunteered to be on the committee.
Good choice. All right, if there's nothing else, we are adjourned. Thank you very much.